Work on REITs in India started almost 15 years back.
What is a REIT and what does it invest into?
REIT is an investment vehicle. It's a revolutionary investment product, I would say.
First REIT saw light of the day in 2019.
Demand for real estate is ever growing.
And we expect we'll continue to see one REIT every year.
So Alok, you're also the chairman of Indian REIT Association. What's the kind of returns an investor can expect?
So I would say a few points.
This is the wealth advisory arm of HDFC Securities. My name is Pranab Uniyal and I lead the business at HDFC TRU. REITs is an investment class which has evoked a lot of investors' interest lately. A lot of investors understand it. For a lot of other investors, it remains a novel concept and something that they probably haven't invested into. So today we are here to break down and understand that asset class a little better. And who better to explain to us than the two gentlemen who joined me today? I'm very happy to introduce to you Mr. Alok Aggarwal, who's the MD and CEO of Brookfield Properties. He's also the chairman of Indian REIT Association, and Mr. Amit Jain, who's the CFO of Brookfield Properties. So welcome, gentlemen, and thank you for being here in this podcast.
Thank you for having us here.
Thank you, Pranab. Thank you for having us here.
So, Alok, my first question to you is, REITs as an asset class, right, is a relatively new thing. I say relatively, by that I mean probably, right? Equity and debt as asset classes have been known to us for the longest time, for quite a few decades. Could you just help us understand the advent of this particular product in India? How has it been in the West? So the evolution of REITs in India, and what do we have to learn from how has it evolved in the developed market, because that is a sign of things to come for this asset class as far as we are concerned, isn't it?
Yeah, no, that's an interesting question. And while, as you said, rightly said, that REITs have been globally, they have been there for last 40 years. And India, while you said 5 years, I would slightly, take it backwards and say work on REITs in India started almost 15 years back, for first 10 years. And that's the time it takes for any new asset class to kind of get come in actually. And regulator, industry bodies, policyholders, stakeholders all work to make REITs a reality. And first REIT saw light of the day in 2019. And that was a time when REIT was new. First REIT came in and we had 6,000 unit holders. Since 2019, we come to 2025, we have 5 REITs, 4 office REITs, 1 retail REITs, and we expect we'll continue to see 1 REIT every year in next 2 to 5 years. So that's what we see going forward. Having said that, as I said, 6,000 unit holders today have become 330,000 unit holders. So you just imagine the kind of growth which REITs have seen. 1 REIT has become 5 REITs. The market capitalization of 5 REITs put together is about 1,65,000 crore. The assets under management is about 2,35,000 crore. In office REIT plus retail REIT, we have about 1,76 million square feet of commercial real estate as part of the REITs. And trust me, REITs have distributed 26,700 crore in form of distributions in last, I would say, 4-5 years since inception. So REITs today is not just a fringe product; it has become a mainstream product actually. So that's something very, very evident. But we still have a long way to go. USA has 200. Globally, probably world has many more. Just when you said what we can learn,
Sure.
I think what we need to learn is that REITs is a total return product. It gives a distribution which could be about 5, 6, 7%, which is tax efficient, and then balance comes in form of growth. Regulator has done a fantastic job in making sure that REITs are top notch in terms of compliances and governance, and we'll talk more about it. But in terms of, I would say, governance, transparency, which is hallmark of REITs in India, I think it's a redeeming feature, and that's something we have learned as from Western world also, and we have implemented in India. So that's what I would say is the evolution of REITs in India.
Right. No, thanks. And you're saying 200 REITs in India and we have 5. and long way to go. But you also expect one REIT to probably come up every single year.
Every year, yes.
Yeah. So that's an asset class, and then investors should really be aware about, right? Because the market or this particular product is really opening up.
Absolutely.
Thanks, Alok. Amit, what is a REIT, right? Now that we have discussed how important REIT would be, or it is now, and would be in the future as well. But could you just help our investors understand what is a REIT and what does it invest into?
Uh, so it's a revolutionary investment product, I would say. Real estate investment trust or a REIT is a investment vehicle that allows investors to indirectly own uh, ownership in a diversified portfolio of income generating grade A real estate assets in a liquid, transparent, and regulatory format.
Right.
Units of a REIT can be traded on stock exchanges, and investors can enjoy all the benefits of a real estate asset class without going through the hassles of owning and maintaining physical properties. SEBI, as Alok said, has built in various investor protection regulations within the structure, within the framework. Some of it, provides stability to the returns. Like there is a requirement that at least 80% of the portfolio has to be in income generating and completed assets.
Sure.
So that ensures that there is a stability in distributions and transparency as well.
Right.
On your second question, what asset classes can come in globally, we have seen there are diverse asset classes that are existing under the REIT structure,
Mhm.
be it shopping malls, office complexes,
Mhm.
warehousing, industrial parks, healthcare, hospitality, data
Right.
centers. In India, the first wave has primarily focused on grade A offices.
Sure.
There is a retail REIT as well. We expect over time other assets would start coming in. Going forward, I would say looking at the boom in e-commerce and quick commerce
Mhm.
sectors, where housing will be a key focus. Data center is another industry which has a lot of potential to grow. It is expected that data center industry will grow $200 billion by 2027, driven by 5G, AI
Mhm.
adoption, and data protection laws introduced by the government of India. So that will be a key focus area as well. And REIT as a platform will provide ample opportunities for this sector to grow and circulate capital. So I would say a REIT as a structure has not only increased the accessibility of real estate assets to the investor, it has also provided liquidity, which is often missing in physical property ownership.
So, Alok, I started the podcast talking about investors, REITs, etc. What does REITs or what does REIT do to an investor? What is the value that it should find in an investor's portfolio?
Well, I would say REIT is a burst in every investor portfolio. And now investor has to decide what quantum of allocation they need to do to REIT actually. And as Amit has said, as you have said, REIT is a total return product. It will give a tax efficient regular returns, and then it's a long term capital appreciation. And REIT is a great product for creating a passive income, whether it's a retail investor, family office, institutions. It's a great product for creating a passive income, and they also provide stability to investors' portfolio. They are inflation hedged, while they will not make as great returns as equities, but the consistency of return is there, and volatility of returns is not that much as compared to equities. So that's where REITs I would provide stability to investor portfolio.
So, equity, debt, and REITs, and of course, commodities, other asset classes as well. But and I guess that's something that investors should increasingly look at, right? Because currently the exposure to REITs in most of our investors' portfolio is fairly minimal or negligible. Right. Great. Thanks. So, Amit, what are the drivers of a REIT's return, right? Because we keep hearing about, it investing into underlying asset classes, which could be properties. But then, what are the kind of returns that investors are looking at? What drives up an investor's return? And even let's say from a forward-looking point of view, what will lead to variation in REIT returns, positive as well as negative?
Um, uh, I would say appears to be a complex question, but it's very simple, right?
Sure.
I would say REITs returns are comprised of two components: regular distributions that are made from cash flows generated through rental incomes, and long-term appreciation in the value of REIT units. Now, key drivers for growth in distributions could be the occupancy levels, the quality of tenants, the micro market in which a REIT operates, the quality of management that is managing the portfolio. At a portfolio level, efficient capital management is critical. Cost of debt and principal debt repayments tenor can boost returns. At macro level, say the industry level conditions matter. Say in growth phases of IT and GCC industry, we see strong demands that can impact the valuations of the REIT. For instance, in 2024, we saw great uptick in demand from flex offices work operators, and that was a year where we saw a lot of uptick in the occupancy levels, and thereby REIT performed great in that particular year. Broadly, I would say that the growth can come from contractual escalations in the rentals.
Sure.
There are mark-to-market opportunities on releasing
Right.
and new leasing, right? That will impact the distributions. Falling interest rates can make distributions from REIT more attractive as compared to bonds, thereby increasing the valuations as well. Tenant mix, occupancy levels, these are all the operating factors
Sure.
which can impact returns from a REIT.
Sure. Thanks. So Amit, further on that, what are the various kind of distributions? And in fact, before that, could you just spend a little time on the REIT structure, and then help us understand the distribution, and also then probably help us understand the taxation related to that distribution, because ultimately, for an investor, it should always be the post-tax return that he should be looking at, or he or she should be looking at. So could you just help us understand that dynamics?
Very interesting and very important question, Pranab. So REITs are structured as trust vehicles, and why is that so? Because the regulators and the product is a total distribution product. It's a total return product, and mandatorily regular distributions have to be made. At least 90% of the cash flows have to be mandatorily distributed to the unit holders. So if you compare it with a company structure, right? If company has to distribute 90% of its cash flows, it could be difficult for a company, because companies can distribute in the form of dividends,
Right.
and there are certain restrictions that applies on dividend. They cannot go or distribute beyond the profits,
Right.
even if the cash flows are higher. And to distribute such higher cash flows, they may have to undertake certain capital reduction schemes, which take a lot of time, etc. So the company structure is not efficient for making regular distributions.
Sure.
Now, since REITs are structured as trusts, which are passed through, as I said earlier,
Right.
REITs can return even the capital portion back to the investors.
Right.
Now coming to the various forms of distributions, REITs generally invest in asset SPVs in the form of equity as well as shareholder loans. So when SPV has to make distributions to the REIT, it can go in the form of dividends, it can go in the form of interest on shareholder loans, and if there is still a surplus cash available post making these two kinds of distributions, shareholder loans can be repaid, right?
Sure.
So the distribution from SPV to REIT comprises of these three components: dividend, interest on shareholder loans, and repayment of loans.
Sure.
Now, since REIT is a pass-through vehicle, the same stream of incomes will be distributed back to the unit holders.
Sure.
In a tax-efficient manner. Now, dividends are tax-free under REIT structure. Regulations have made dividends to be totally tax-free.
Mhm.
There are certain conditions for the SPVs to be met, but those are very easy conditions.
Right.
And thereby, dividend is totally exempt, which is different from dividend received from a company structure.
Got it.
The other component is interest. Interest is taxed at the marginal rates, whatever
Sure.
is applicable to the unit holders. Return of capital is tax-free at the time of receipt,
Mhm.
but at the time when investors are selling their units on stock
Okay.
exchanges, the principal portion is reduced from the cost of acquisition. So I would say the there is a deferment on the taxation when it comes to return of capital.
Got it.
So, as compared to any other real estate asset class, REITs are definitely better when it comes to post-tax yields.
Sure. And Amit, what about sale of REIT units, right? So if I buy it in the secondary market and I sell it, what is the taxation there?
So it's similar to equities.
Okay.
So 12.5% for long-term investors.
Okay.
And as I said, at that point in time, whatever capital the unit holder would have got back as distribution,
Sure.
that will get reduced from the cost of acquisition and thereby increasing
Understood.
the capital gains at that point in time.
Got it. Just to summarize my understanding, right? There is, in the distribution that an investor gets, the investor gets interest.
Correct.
Then, because this is all REIT pass through, right?
That's
so
correct.
the SPVs will pass it to the REITs, REIT will pass it to the investor. So there's distribution, there's interest,
Correct.
there's dividend, and there's
Capital repayment.
Repayment, right?
That's correct.
And dividend is
tax-free.
tax-free. Interest is MMR.
Yeah.
And capital repayment, rough and ready, is more or less capital gains, but reduced from the
deferred
investment
at the time of
at the
sale.
time of sale of assets. Looks a very good product from a taxation point of view, isn't it? The difference
Right.
between a pre and post tax is very well optimized. What is the, let's say, weighted taxation that you would have seen? Rough and ready, because we talked about various streams, so what does it look like? And like I said, I don't want you to kind of just quote a number. What's the kind of range that one could look at?
It depends on the capital structure
Sure.
of different REITs. So if you analyze the distribution mix of 5 REITs we have,
Sure.
there are REITs where dividend distribution component is higher as compared
Sure.
to other 2 components. So I would say post-tax yields for those REITs would be higher, right? Because dividend is totally tax-free.
Right.
While there are REITs where the capital repayment portion is higher. So I would say, depending on the capital structure at the time of making investments by a REIT,
Sure.
the post-tax yields may differ. We, as REITs, continue to do different M&A activities. We continue to do different restructuring by adopting capital reduction schemes to try and maximize the distributions and minimize the taxes.
Sure.
Right. So it's an ever evolving exercise, and the endeavor is to increase the dividend component to the maximum possible,
Right.
and thereby getting the benefits of tax-free dividend
Sure.
distributions.
Sure. Thanks, Amit. So, Alok, you're also the chairman of Indian REIT Association, right? What are the mandates for this association? And, who are the members? What does it do? What are the kind of initiatives that it is looking to undertake?
So IRA, which is Indian REIT Association, is a non-profit body which has been kind of promoted by regulator as well as industry REITs, and we have 4 REITs were listed when IRA was formed. They are the founding members, and then we have one new REIT which is recently listed. So 5 REITs are members, and any REIT which get listed in India or which comes into existence, that will be a member of IRA. And IRA has done a commendable job in promoting investor education, taking REITs to kind of investors across cities. They have been holding roadshows, seminars, activities in grade A cities, grade B, tier 2 cities
Right.
on a monthly basis.
Right.
IRA has also been between industry as well as a bridge between industry as well as regulator
Right.
and government bodies, and kind of really point out where REITs REITs need support.
Sure.
And I would say IRA has played a role. We have seen a lot of reforms. We have seen in terms of how REITs have been classified as equities. That's a big reform. This
Mhm.
means more money can flow into,
Which has been recently in the news.
kind of brought
Absolutely.
into. This means
Right.
more money, more
Right.
funds could flow into REITs.
Absolutely.
And then REITs can also become part of indexes actually. So passive money can flow into REITs.
Right.
So
True.
that can happen. Then in terms of what Amit said in terms of taxation, again IRA has explained their point why REITs should not be at disadvantage to any other product. So
Right.
that has happened.
Right.
In terms of bringing in liquidity. Initially, minimum you can invest, a retail investor could invest 2 lakh rupees.
Right.
Then it was brought down to 50,000.
Mhm.
Today, a retail investor can buy 1 unit of REIT at 200 rupees or 500 rupees.
Which is just fantastic, right?
Which is fantastic. It
And
has
the
created a lot
journey
of
that it
liquidity.
has taken, right? It's not
Yes.
like it has come down from 1,000 to 200 or whatever, right? I mean,
Yes.
sorry, what is the now minimum investment?
So now minimum is 1 unit of REIT.
Which is
Which
300.
is,
300 rupees,
right,
200
150
rupees.
to 500.
Right, right.
And that is the
right,
reason why the number of unit
It
holders has
brings
gone
up
from
participation so much more. Yeah.
absolutely
Yeah.
6,000 to 3,30,000.
Wow.
If you see the growth in 5 years.
Yeah.
So I think a lot of work has been done by IRA, kind of making REITs mainstream.
Yes.
Now REITs, I would say, are no longer I already said, they are no longer a fringe, kind of a product. It's a
Right.
mainstream product. But growth has to come. As we
Yes.
said, US is 200, India is 5, but that's
Right.
okay. We'll catch up. That's no doubts about that.
Right.
That is where we are.
We will indeed.
Yes.
Yeah, and just to add to that, IRA, I would say if you compare it to Association of Mutual Funds, which is say around 25 years old in
Yes.
body,
Yes.
the kind of work they have done to promote mutual funds, IRA is on the path to
Right. Right. And
copy,
it is required, right?
yeah,
Because while it is an exciting class, we can't deny the fact that it is more of a, let's say, a recent asset class. There are dynamics which are different from other asset classes, so it's important for your association to also then educate the investor.
Absolutely.
Yeah.
Absolutely.
Yeah.
Yes, true.
So Alok, whenever somebody says REITs, the second word in the same lingo comes as InvITs, right? REITs and InvITs. You are part of the REIT ecosystem. Could you help us understand how is REIT different from InvIT? How the dynamics different? Let's say how the yields different. Regulatorily, is there any difference? Could you just help us understand all of that?
No, so valid question. And REITs and InvITs in India are considered separate, whereas
Sure.
globally they are one product
Is-
actually.
okay.
Yes, globally they are one
Interesting.
product.
Okay.
But India, if you really see, REITs are they have income yielding assets,
Mhm.
and their yields could be lower than InvITs, but
Okay.
they have a growth story. The growth is higher, and that's why we see consistent and constant growth in REITs, and this means that total returns from REITs are no less. Yes, so REITs are real estate, InvITs are infrastructure. They could be transmission lines, they could be gas pipelines, they could be roads, they could be infrastructure products, long-term annuity kind of products. They are there. Their annual yields are higher, but growth is not as great as what REITs have. So that's a fundamental difference between REITs and InvITs.
Amit, tell us about the valuation, right? We have heard about NAV of a REIT. What does it mean? And what significance does it have on the price that I want to be buying at in the secondary market?
So again, a great question. So NAV. Let me just try and address that question. What is NAV and how
Mhm.
is it calculated? So REIT regulations mandate semi-annual valuation of the REIT's assets
Okay.
by independent SEBI registered valuers, right? So
Okay.
these valuers adopt internationally accepted valuation methods like income approach method or discounted cash flow methods to value a portfolio. They take into consideration the projected cash flows, the tenant mix, the geography in which REIT operates,
Mhm.
the macro conditions, the micro market conditions. So all these factors which are relevant to appraise a particular cash flow stream are
Sure.
taken into account by these valuers to compute the gross asset value. Right? And gross asset value is the summation of value of all the assets under a REIT, right? And once GAV is calculated, we reduce debt and make adjustments towards working capital to arrive at the NAV. Net asset value per unit is a key benchmark that investors track, and units price market value could be lower or higher to this NAV. So what NAV does is it gives a independent assessment of the value of the portfolio a REIT has. Investors may have their own perception about the quality of management, the quality of assets the REIT may has, and therefore the price at which units actually trade in the market
Mhm.
could be different from the NAV value.
Okay.
But still NAV provides a benchmark, and investors can track the difference between NAV and the unit price, the market price, to measure the performance of a REIT.
Sure. And you're saying it is typically valued twice in a year.
That's the
Right.
minimum requirement. REITs
People
and investors
do
are
it
free
more
to
often than not?
yeah
More often than twice?
no. So
Okay.
generally no, but
Okay.
that's the minimum requirement.
Okay, got it. So NAV that way is a guidance, and people will have to, let's say, observe the deviation
That's
between the CMP and NAV. That deviation could mean anything, but at least that becomes a benchmark
That's correct.
for the price. So Alok, one very important really question. Uh, the fact is, REIT, while it is a wrapper in instrument, the underlying performance of REIT is the underlying performance of commercial realty, right? You did touch upon it in your opening remarks, but could you just help us understand the commercial realty in India? How's it doing? What are the future prospects, and thus really the future prospect for such an asset class? What are the risks, and what are the upsides, and what should an investor be wary of when it comes to commercial realty? Could you just help us understand?
Yeah, I think that's an important question. And when I talk about commercial reality, of course, it could be in office plus retail here.
Sure.
And out of 5 REITs, 4 are office and 1 is retail. But I would like to focus with commercial real estate means office here, because
Sure.
that's a growth driver for India in large volumes. Of course, we'll have REITs of other class also. If in India, if you see, why REITs have deliver such a strong performance, the occupancies have gone up, their distributions have gone up. One reason is that India is office to the world actually. India India has about 51% share of outsourcing globally, and that share is growing. So demands for offices in India is structural
Sure.
and will continue to remain there for short, medium to long term.
Sure.
Now, what is driving this growth? First of all, when companies are shifting their operations to India, services to India in terms of back office or even in terms of GCCs,
Sure.
the cost of doing business in India is not more than 10 to 15% as compared to what is the cost of doing, business in Western world actually.
Right.
So that costs arbitrage is a one big arbitrage. Second thing is which has really emerged is a talent arbitrage.
Mm-hmm.
Today, while cost is important, but in terms of talent, the kind of a talent and the amount of talent which is available in India, that is not available in I would say the Western worlds. Well,
Right.
it's probably you can hire 5, 10, 20 people, want to hire 200 people, 300 people,
Right.
that you have to look at India. So that's again a big kind of a driver for companies shifting their, back end offices or back end operations to India. And third part is these are not back end anymore. Today, these work has become from operations to core, and they've become mainstream. Many of the companies, engineering design, robotics, artificial intelligence, these operations are done from India. So it has really become a core and strategic. And that's why we have most of the companies in form of GCCs setting up bases in India.
Mm-hmm.
And every company, their boards are saying, what's your India strategy?
Sure.
If you don't have an India strategy, please have one.
Right.
So most of the companies, many of the GCCs are in India. Today we have 1,500. It can go to about 2,500 to 3,000 next 5 years.
Sure.
In terms of revenues, I would say today GCCs have about $60 billion revenue annually.
Okay.
It can go to 120 to 130 billion
Sure.
$. So we have GCCs on one side, then traditional IT companies, tech companies,
Sure.
they're taking office space. And why they're taking office space? While the growth has come down,
Mhm.
while the growth has really come down, but if you really see their office portfolio pre-COVID to post-COVID is down almost 30 to 40%.
Wow.
This means the office portfolios are down because they have surrendered space. People went back to working from home, but the number of employees has gone up from anywhere between 30 to 80%.
All right.
So today, when somebody
net
wants
impact is okay.
people are coming back to offices, they need
Sure.
space as of today
Sure.
or as of yesterday.
Sure.
So these are two things.
Right.
Then we have Indian companies. Indian GDP is growing 7%. We have
Right.
Indian companies, banks, number of companies. They need space. So that's again the third driver.
Sure.
Fourth is again government did SEG reforms.
Mhm.
commercial real estate was struggling a bit in terms of SEG reforms not happening, SEG taxes having faded out. So those reforms are in place. So
Sure.
that's again driving demand for office space in SEG campuses.
Sure. Sure.
So these factors ensure that there are a lot of tailwinds for REITs in form of commercial offices. So these
Sure.
are, I would say, in terms of demand. Quickly, we can touch upon interest rate.
Mhm.
Interest rates have gone down by 100 basis points in last 1 year.
Mhm.
This means debt cost for almost all REITs have gone down. Their distributions have gone up. Then we already have talked about REITs, so I will not touch upon. But
Mhm.
REITs, with the REITs coming up, what happens is developers can shift, launch a REIT, unlock their capital,
Right.
and do more office development. India is leasing 80 to 85 million square feet of a gross leasing
Okay.
last 2 years.
Okay.
And that number is touching high every year.
Okay.
So
And
that's
and Alok, how is that in terms of supply? And what is the
so
matchup
supply,
between supply
while
and
is
demand?
probably, I would say, evenly matched,
Okay.
but not but the demand, the supply is in places where the demand is not. So demand and supply are evenly matched in terms of number,
Okay.
but not in terms of geography.
Geographically,
Yes.
absolutely.
So
Okay.
some of the micro
That's where the
markets
opportunity is. Okay.
so that's a opportunity.
Right.
And India has today 1 billion square feet of our office market. It's
Mhm.
a fourth largest globally.
Mhm.
And as I said, the demand for office is structural in India. So
Right.
that's provide a strong, support to commercial REITs. And
Understood.
that's why you see we have at least out of 5, we have 4 office REITs in India.
So, Amit, what does it mean for the investors in terms of the track record that REITs have shown, let's say, internationally? How has this asset class done internationally, performance-wise, compared to equity and debt? And in a relatively, let's say, recent times or shorter times in India, how has REITs in India done compared to equity and debt?
So REITs globally have shown great performance in the long run. For instance, in the US market, uh, uh, REITs have over a multi-decade periods outperformed broader equity indices, and while providing stable income streams. They have also, have been effective inflation hedges because
Sure,
rentals and property values tend to grow with inflation.
indeed.
There is a correlation that exists in the short term investment moves, but in the long term scenario, REITs provide diversification opportunities, right?
Mhm.
So, in the mature markets, and REITs have been in existence in the global market for more than 6 decades, while in India these are just 6 to 7 years old, as you
Sure.
mentioned earlier as well. In the mature markets, REITs have consistently beaten inflation,
Sure.
thereby preserving investor capital and even growing the investor purchasing power. Uh, Once the Indian market matures, we feel that similar story will play out in the Indian market as well. This is because and we touched upon it earlier. REIT regulations are designed in such a way that investor rights are very well protected
Sure.
as compared to any other real estate investment avenue.
Mhm.
And once the market starts gaining confidence on this product, there'll be more and more participation, and the success story has just started.
Right. So, essentially, great
Inflation,
diversification, right?
yep,
Hedge against inflation.
correct.
And my sense is even within India, especially in the last few years, it's done fairly well, right? It's,
Yeah, I was reading one article. So last 5 years, particular period, REITs delivered around 14.8% total return, comprising of say 7% of yield, as
yeah.
Alok mentioned, and remaining 7.8% in terms of capital appreciation,
Yes.
as compared to Nifty, which delivered similar kind of returns
Right.
during that period. So
Right.
these are kind of
Which
akin
is
to
great as a
equity.
diversification
That's correct. That's
and
correct.
the fact that, no,
And
perfect.
and with the regular income yields, right,
Absolutely.
which is a
Absolutely.
great product if you compare it to equity.
Absolutely.
Similar
And
total returns while
yes.
with regular income streams.
Yes, and really that's a trick for the investors as well. When they look at typical returns that you would say look from a particular stock. The key difference is you just can't compare the price, because most of the REIT returns are coming out of
Distributions.
dividends or the distributions,
Correct.
DPUs, right?
Correct.
Which will not show up in the price.
Correct.
So the total returns, like you mentioned, is far higher than the price returns that they would get to see.
That's
Great.
correct. Perfect.
And so just a quick follow up, and again, I won't ask you to put it on paper or something that you have to vouch for. But what's the kind of returns an investor can expect over a fairly long period of or a few cycles?
Uh, uh, I answered it briefly. My personal view,
Sure.
and I'll not sign on it. But these are equity-like returns in the long run for
Mhm.
sure. And the reasons are very simple. As Alok mentioned, the commercial real estate and the real estate market has to grow.
Sure.
If India has to become a 7 trillion or 10 trillion economy,
Sure.
that growth has to be housed in some or the other form of real
Mhm,
estate,
mhm.
be it commercial, be it retail, be it warehouses, be it any other sector, data center, etc. Right. So I would say there is a great correlation with the equities market as well. Right. The demand for real estate is ever growing,
Mhm.
and with that kind of growth,
Mhm.
the distributions or the overall valuations or the total returns would be similar to equity returns in my view in the long run.
So Alok, just help us understand, or for investors, from an investor's point of view, there are a few REITs there, like you mentioned, 4 commercial, 1 retail. How should an investor look at it when he's trying to invest into a particular REIT? What are the various things that he should consider? Should he invest in 1, 2? Should he invest in all? What are the things that he has to look at?
No, I think interesting stuff. Luckily for us in India, a regulator has ensured that only serious and well-capitalized players and people who have experience of, managing hard assets have come and, kind of launched their REITs. All 5 REITs are launched by strong promoters with a lot of
Mhm.
experience in whatever assets they manage. So I think anybody could probably pool in his capital and invest across these REITs, I would say
Sure.
generally. But in general, if you want to look at, I would say what are the parameters? I would say see quality of assets. While for
Okay.
retail investor, it's not so easy, but see quality of assets.
Mhm.
See what micro markets they are.
Okay.
That's important. Try to see the quality of tenants.
Mhm.
Luckily for most of the commercial real estate, tenants are tech companies who have very strong cash flows, but still look at quality of tenants.
Sure.
If you can really go slightly deeper, look at the tenure of your leases actually. How sticky tenants are.
Mhm.
Are they growing within the REITs? If tenant is growing within REITs, means they like to be there actually. The risk of vacancy is minimized. Also see if they are diversified.
Mhm.
I mean, geographically, the REITs should be diversified. In terms of tenants, also they should be diversified. Not one tenant or 2 tenants should be holding very high percentage of portfolio.
Right.
I think look at these factors, but I would say Indian REITs as a bunch has performed well,
Right.
and you can invest in a pool of this
Sure.
REITs. That would be my take.
And I think, from an ownership point of view, the way this asset class has emerged, we have seen very good, well capitalized, well governed institutions behind, running these deals, right? Running these REITs. So, from that point of view, like you mentioned, the customer is well protected,
Oh yes, so that is one. I
Yeah.
mean, we have very strong players. That is one,
right?
and regulator has done a fantastic job.
Yes.
So today, just to kind of quickly mention that today, as per regulations, the debt cannot be more than 49%
Right.
of gross asset value. So that's
Right.
there. And as Amit said, 90% of cash flows have to be distributed.
Right.
Then then independent actors take majority of decisions on related party norms.
Uh-huh.
So the regulator has just made sure that this product is so foolproof,
Right.
so safe that interests of small investors as well
Right.
as large
And
investors
that's when the
are
regulator
so
has
well
brought down
protected.
the minimum investment as well, right?
Yes,
The
yes,
regulator
and they have
felt
done everything
comfortable
gradually.
enough that you
Absolutely.
can get retail investors 300
Absolutely.
rupees into the
Absolutely.
REIT.
So that has meant that it is not a product only for institutions or
Right.
high net worth individuals.
Right.
Right? Even and every individual, if wants to invest 200
Right.
rupees, 500 rupees, and want to have an exposure in real estate,
Right.
hard assets, it
Absolutely.
can be done, and in a liquid format, right, and a well regulated format,
Right.
which is unheard of in when it comes to real estate investments.
Right.
Yeah.
So, Alok, could you then summarize for investors about this REIT and what value then does it bring to the investors' portfolios?
No, interesting. So I would say a few points. Great foundation laid out, a lot to come. Multi-year runway.
Sure.
So that's one. More assets to come. That's second. Great product to have passive income. REIT has demonstrated the returns. So mid-teen returns with low volatility, low risk, and great way to participate in commercial or real assets growth for investors in India. That's, I would say, is a REIT story. And finally, what we say, REIT is right. It is not a question whether REITs or equity. REIT has to be part of your portfolio. Now you have to decide how much you want it to be part of your portfolio. That's what I would say.
Thank you, gentlemen. That was really fascinating discussion and helped us understand REITs as an asset class, something that we strive to do in our TRU Talk. So thank you so much once again, and we'll meet you in our next talk.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.